Hi and welcome to this month's business presentation from Irish Life. Hi and thanks for watching. This month I thought I'd take the opportunity to look at the challenge of dealing with investment performance and client expectations. And to do so, I took the opportunity to talk to Michael Hayes, Investment Manager with Irish Life. I started by asking Michael, what does the stock market performance yesterday have to do with clients' pension funds?
Ultimately, very little, but it likely won't stop brokers getting the frenzied phone calls from clients when markets are down. It doesn't help when you hear news headlines about the market tumbling, only to find out that markets have actually tumbled by 2%. The media and an ever-increasing array of pundits are there to circulate a vast amount of information and commentary, but the majority of it is just noise.
I then asked Michael, is it too late to invest now in the markets or equity-based funds? Have the funds reached the peak? Is now a good time to invest?
The answer really is that nobody knows whether the current bull market will continue, but a more appropriate question might be, can you achieve long-term goals by leaving money on deposit at a time of historically low interest rates? The reality with any sort of long-term goal that involves wealth accumulation, such as a pension, is that it certainly can't be achieved by leaving all of your money in cash. Our world is dominated by short-term thinking at a time when people are living longer and will need their retirement funds for longer than ever before. It'll be no surprise to anyone then to know that stocks are being held for shorter periods than at any time since the 1920s. The average holding period for a stock on the New York Stock Exchange is now around 20 months, whereas if you go back 20 years, it was over 5 years. This thinking is in clear contradiction to clients' long-term goals and needs. The majority of pension clients must have a time horizon well beyond the short term, so their behaviour may well not be aligned with their goals.
So then I asked Michael, how do you convince clients that to achieve their goals they need to invest in real assets and most importantly, they need to stay invested?
Our Irish Life multi-asset portfolio funds have recently passed their 1-year anniversary and could well help provide a solution for clients. A considerable amount of time and resources was spent by Irish Life investment managers to build a long-term framework that the funds use. There are 5 MAPS funds to choose from, and each MAP fund is managed to a specific risk level. In order to ensure this, Irish Life investment managers will rebalance the funds every quarter back to the long-term strategic asset allocation. The danger of not rebalancing can be clearly highlighted with managed funds, when at the start of 2007, equities made up nearly 80% of the average fund, and this had fallen to 60% by the beginning of 2009. This is not only a huge swing in the risk profile of the fund, but also over and under exposure to equities at exactly the wrong time. In our MAPS funds, we are focused on delivering smoother long-term returns and are not influenced by short-term considerations or noise.
Finally, I asked Michael, how can the MAPS funds deliver for clients?
The MAPS funds are delivered to your clients from Irish Life, a strong and trusted partner for your business, and from Irish Life Investment Managers, Ireland's largest asset manager with €40 billion in assets under management. The MAPS funds should allow you to help your clients to focus on the long term and to allow them to invest with confidence and, most importantly, to have the peace of mind to stay invested regardless of the noise in the background.
So what's the key message from Michael? Well, I suggest it probably is that we have to get clients to think longer term, manage expectations. So why not check out Beeline with Irish Life and see what investment options and choices they have to help you to present such a message to your clients. Thanks for watching.